Well, moving on to the economy now. This one affects you and I. Yes, of course, health matters affect you and I. But some would say some perhaps more than others. But looking at Nigeria's economy now, we understand that the consumer index and inflation report for July 2021 has gone down somewhat by 0.37% to 17.38% against June 17.75%. Food index, which has been really high, also dropped by marginal 0.8% to 21.03% in July against June's 21.83%. Now we're looking at the meaning of this figure. So it could be possible that, I don't know whether you've seen it in the markets, because what we're talking about here, this percentages should actually reflect in terms of what you are able to buy in the market. Is your Naira able to buy more goods in the market? Is that what it should mean? Well, we have the experts here. Professor Ken Ife is a macroeconomic policy analyst. You're welcome to Sunrise Elite this morning.
Thank you for having me. Good morning.
And we also have with us Mr. Monday Michaels Ashibogu, who is the National Publicity Secretary of NASME, that's National Association of Small and Medium Enterprises. You're welcome to Sunrise Elite this morning.
Thank you.
Well, we've been looking at this marginal decline in inflation in general. I guess the good one is food inflation, because before now people have been reporting rather high prices of food stuff, especially in the market. But this is what we're seeing now. I don't know whether you can confirm that I don't know if you ever go to the market, if you have that chance to, that indeed food prices or anything that you're able to buy has been on a decline. But what do you think will be responsible for this?
Well, first of all, let's clear what we mean by a lowering figure, because I go to market almost every day.
You do?
Well, of course I do. Now, what it says is that the rate of increase has dropped. Not that it's not increasing. It's still all indices are increasing. So what I bought 2 months ago for 100 Naira, this last month, the price would have increased to 100 it would have increased by 117. But no longer 179. So it's still increasing, but not as much as it increased the month before. So I wasn't going to go to the market expecting that the garden egg I bought for 10 Naira will now be 9 Naira. No, it will still increase.
It just means that...
But it's just that the rate of increase is not as high as it increased the month before.
Wow.
So that is, and it's not one item, across all items. There is increase across all items, and there's a lot more to this when we begin to unpack it, because there are regional, seasonal variation, there are regional state variations, and there are so many other indices at play. 5 of them: headline, which is CPI, core inflation, the food basket sub-index, rural and urban inflation. They're all playing different games. We'll unpack them.
Okay, but what effect will this, what immediate impact does this mean for medium and small enterprises, for you at NASME?
Well, it's not far-fetched from what the professor said. The prices haven't changed, and for those who are into production, it also impacts more on their production capacity. And if you recollect that also, insecurity has also contributed significantly to those who are into agro-processing. So the figures haven't changed in terms of purchase, but also in terms of production, it's been significantly high.
I think what has, worried a number of people, because if you look at the basket in general, the general headline is 17.75, if I'm correct, dropping from 17.93. But food inflation is still quite high, 21.83%. Yeah. Was there ever a point that we were at this level, 21.83?
Well, the thing is, over the last 3 years, the driver has always been security. And security, the highest point of security into this system is food basket sub-index. And this is because we have insecurity issue across the whole 6 geopolitical zones. It's terrorism in the northeast, banditry in the south, in the northwest, then header clashes in the middle belt, and then you have different variants in the south. You have separatism, you have all that. And so you have so many different, and all of them are impacting on food. And if you notice that according to Africa Union, 80% of our basic food are grown by women. 80% of the processing of primary food is done by women, and 80% of marketing of this food in the rural area markets are done by women. And the women are vulnerable because they can no longer go to plant their crops or go and harvest their crops freely as they would. And so that has knock-on effect. But the second thing, of course, is that there is great pressure on our production because we are producing to feed 300 million, not 200 million. You know, we are actually feeding the surrounding Francophone countries. So our food are leaving the frontiers of the north to those. I remember one governor saying that 50 trailers passed through the borders of his heading out to Niger, and that's true. And there's nothing you can do about it because they are all protected by ECOWAS Treaty on free movement of goods and services. It's only when you do value addition that you support the jobs in the country. And then if the products are moving out of the border, you can demand tax. And if the producer wants to escape tax, he registers for ECOWAS Trade Liberalization Scheme, and then, you know, and satisfy the rule of origin and all of that before you can get away with the tax. So, but that's not happening right now. And they're not paying for this food with dollar. They are paying certainly with our naira. So CBN can't see those dollars if there's none. So then, of course, you have the import challenge that even if we have taken steps to delist 43 items from eligibility for Forex, there's still importation. You haven't banned it. The CBN doesn't have the right to ban, but we haven't banned. So people are still going to black market using their money to import simply because the substitution arrangement has not actually confronted the quality threshold of what you are importing. So if you are rich and you can pay for high quality import, to do that until we are able to say that in our country we are able to produce products of high quality that can actually substitute effectively for those imports and of course get exported. So it's a very complex story. But the reason why, part of the reason why the food basket sub-index is high is because if you look at the food sub-index as 21 point and the other one, core inflation, to a 13 point, there's a lag, there's a gap of 7%. And then there's a gap of 3% compared to the composite index. Now, that has always been high. It has always been between 3 and 8%. Or off that is the food has always been so much higher than the composite index. But the core should have told us a better story than the composite index. The reason is this. When you look at the food basket sub-index, there are two components of it. There is farm produce and the processed food. Processed food is also part of the core index because the core index is all inflation parameters minus food sub-basket index. So it is still part of it. And that is why the drop of 0.8% of our in the food sub-basket translated to 0.3837 on the CPI, but then you had an increase rather on the core inflation. The core inflation showed an increase. All other indices went down, but the core inflation showed an increase, which tells you that the difference there is what the contribution of the processed food component of core index. So that processed food component did not drop as much as the food sub-index because in that processed food, some of them are imported.
So how is that impacting people like you who are in the small and medium businesses? We do know that inflation is a very big worry for the Central Bank of Nigeria. They have been doing, being very aggressive in terms of trying to support small and medium businesses. Yeah. They have, advised people to buy the naira, buy Nigerian to grow the naira. There have been all manner of campaigns, and in some instances, they do say that there have been some successes. However, when you look at inflation figures. I mean, it's not exactly translating to lower inflation figures, and I'm sure it's a source of big worry to the CBN, especially as we go towards the next election cycle, as we approach 2023, because we know that this inflation figure is only going to get higher. So, but in the meantime, you have already spoken briefly about what this means for you, but can you speak to why it would seem that the interventions of the CBN in your sector is yet to really yield fruit?
Well, in some sectors it is. When you look at the tech sector, it's been quite significant.
Tech?
Yes.
Did you say tech?
Yes, the tech sector.
As technology?
Yes. There are small-scale startups who have benefited significantly from interventions.
Specifically, what sort of tech?
Well, software. If you look at software applications, if you're looking at software development, if you're looking at fintechs, most of them have been beneficiaries from this intervention. But in area of agro-processing, production, they've been impacted. It's just beyond just intervening and giving funds out. There are other factors that come to play. We've discussed this issue of insecurity in the past, and now it's impacted in production. And then when you look at imports, most SMEs play within the supply chain value system. So you would find them in the processing sector, either as distributors, retailers, or wholesalers. The price for imports or the cost has impacted significantly on what they do. So if you look at the food index, like what the professor said, you look at that, the entire gamut of processing continues to go up because most of them largely depend on the importers who bring in these processed food items. Now, for those who have been engaged in other forms of businesses, you find that the intervention may have played out. We had that with the targeted credit facility. Some persons were beneficiaries, among giving our members too, but it's not just enough to put in cash into people's hands. It's also enough to also look at other factors that may impact on their businesses. Policies, multiple taxations, despite the ease of doing business executive order, you still have some states who are yet to comply. I'll give you some instances. There are people who are also involved in agency banking, the mobile money business. They get harassed on daily basis by councils, you know, and the indirect taxes from council officials, from signage officials, from state governments, from the area boys as well, and the let's call them unofficial council, non-state actors. But what is significant is, despite the fact that government makes an attempt in bringing out cash through the central bank, it's just not enough. It's not enough to put cash into people's hands if you cannot guarantee security of what they do. So if you're putting monies into hands of farmers, for example, to process food or to produce, and you cannot guarantee their safety at their workplace, then it becomes a critical factor that will affect food prices. In fact, we're more worried that this year would have been worse off than it is now in terms of availability of foodstuff in the markets. Because given the attendant security challenges for most farmers within the Middle Belt and Northeast, we were scared that by this time, around this time this year, this food supply would have gone down significantly. But so we are a bit optimistic that with a lot of interventions in terms of security, but mind you, it's not just as if the problem is restricted to one part of the country. As you have issues of banditry in some parts of the country, you have insurgents in the other, you have state agitators and self-determination agitators here and there. People are scared to go about their normal businesses. And the most impacted are always small and medium-scale businesses because these are channels to which the informal sector operates. And largely, women are impacted by this. And the moment where you find women who actually support homes not being able to do that, then you also have another crisis looming. You will be dealing with issues of hunger. You'll be dealing with issues of people moving to the streets with cap in hand, begging. So I think it's very important that we take this into consideration. But if you look at the figures, yes, it's enough to celebrate that, okay, the prices, the inflation figure fell by some percentage.
Well, there is almost very little to celebrate. When you say that, oh, it's still increasing, it's just that what it's saying is that the rate of increment is now somewhat slower.
No, but I think it's also dangerous to generalize, and that's what has happened from the headlines we got. You know, by the time you look at the entire figures and you look at the consumer purchasing index, you look at the composite food index, you would find that there are more revelations from those figures. Those figures would speak more to the real activities around. You find there that food prices have not gone down. From the report, food prices have not gone down; they continue to increase. But the thing is that the pace at which the increase is, had slowed. So, for example, if you purchased something at 120 naira last month, you may be buying at maybe 125 this month. Doesn't mean that the prices haven't gone up. Maybe perhaps the previous month you may have bought at 100 naira, and then in June you were buying at 120, but in July you bought at 125. That's what the report is trying to say. But it has not in any way excluded the fact or given a wrong direction that the prices of things have gone down.
So not a lot to celebrate. Let me quickly send this to my colleague in Lagos. He has questions for you. Ayo.
Thank you, Markwe. My question is first to Dr. Michael Ashibagu. Many people would wonder why it would seem like imported goods are cheaper than those made in Nigeria. There's been that talk around that many people would rather buy imported, not because they are better, but because they are cheaper. And this falls to, your sector, National Association of Small and Medium Enterprises, who largely produce most of these goods and services. You've mentioned a few likely reasons, but could you please explain why that is the case? I mean, one would imagine, for instance, that imported goods also have their own fair share of challenges. Importers have their own fair share of challenges as well.
Okay, I think that it's also misleading for people to assume that there are there aren't factors that contribute significantly to Nigeria's production system here. We have a high cost of electricity here. You have high cost, different kinds of taxations that come to play. So you find local production very expensive here, given that most MSMEs are not working in clusters, right? So that would have reduced the cost of production. But you have finished goods that are coming from an economic system where practically everything is provided seamlessly, and they have different value-added systems that are given to them. They have tax incentives for exports. But in our own case, I'll give an instance. Someone producing in Lagos, particularly in the Ikeja industrial area, you pay as much as 54 naira for electricity per unit. Now, if you're paying as much as 54 naira and you have a processing plant, it means you'll be spending close to 9,500 naira in a day to pay on electricity. That's just one part of it. So the cost of electricity is high. The cost of raw materials, acquiring them, you practically running everything. You're running your own generating sets. You're buying diesel at over close to 250 naira. You're spending on other factors which the state ought to provide at a lower cost. So some of these imported products are produced in environments where the costs for these support systems like electricity, processing, taxes and all that are encouraging for small businesses to operate. So in this environment, that's a major challenge. You can reflect on that when you look at even the rice processing. Before now, before the CBN intervened into the rice processing sector, most of them have been producing at a higher cost. And to date, it has not gone down. The price has not gone down. And the whole idea was to stop importation of foreign rice, which we believed was cheaper, and by blocking that, we would have the local producers produce at a lower cost. But today, the story is different. They will tell you the cost of electricity is high.
Is that to assume that, there is no end in sight to that cycle, or that the CBN, for instance, that's initiating this interventions on behalf of, in support of SMEs hasn't really factored in all these, or you think there is a lot more that should be done that hasn't been factored in?
I think the problem is harmonization of policies. It's just very obvious that we need to harmonize policies. One, you have ease of doing business on one side. You have the electricity companies, the DISCOs, the GENCOs, and the transmission companies on another side, with their regulator on the other side. And they have different policy. They have a different ministry. You have finance running its own Finance Act 2020 on another side. So the thing is, we need to harmonize all policies at national and state levels. So if you have that, you will be speaking, to just one problem. But in this case, where a government is saying, okay, you can incorporate a company for less than 5,000 naira, for example, because of the ease of doing business. But when you want to open an account with the bank charges you as much as 10,000 naira for a search for a company you incorporated with 5,000 naira. That speaks in volumes to the challenge of an MSME. So if you do not harmonize these policies, you don't bring them together to work, in one direction, you will keep having policies coming from different sectors of the economy that are at variance. So it's bound to affect production, it's bound to affect costs for goods and services.
Well, Prof, how do you suggest that we take this on, Professor Ife? I'm just wondering if you agree with some of the things that Dr. Michael Ashibogo has said. How do you see us unbundling, if I can use that, this challenge and helping the production capacity of Nigeria? Otherwise, as you very well have told us a number of times, without producing, we will keep having inflation.
Yeah, one thing I needed to point out is that, there is dumping of substandard goods in the country. Everybody knows that. And even when we closed the borders, it became more obvious. And secondly, there is the anti-competitive behaviors of the countries that are actually exporting their products to Nigeria. And you can't stop them. They will subsidize their products to enter into Nigerian market and decimate the production capacity in the country. They're doing that. Take textile, for example. In China, in Europe, in America, most of the suits we have only about 10, 12 suits in our cupboard. We don't buy many suits. We don't buy more than 10, 15 shirts. But look at Nigeria. Nigeria is the country that spends money on textile. On Thursday, Friday, Saturday, women will do a shebi for any wedding, for any birthday, everything. Will spend money. And so you think India and China will let you allow your cotton industry to grow the cotton, and allow you to do the joinery and then do the garment? They will finish you. They won't let you. Because billions of dollars have been spent in industrial capacity to produce the textile targeting Nigeria. No other country in the world spends money on textile. Half to a quarter of what Nigeria spends money on. And as you know, is every day. So, you're going to have to take this into account. They will subsidize their products. Government to make sure they push it into the economy and undermine the productive capacity of our MSMEs. End of the story. But then, at the same time, there are other internal forces working against us. If you look at the GDP composition by origin, you see agriculture around 20 to 24. You see industry around 18%. It should actually be double of agriculture. And then you see services about 54, 56. The weakest link in our system is the link between primary agriculture and the production, the processing. That's the weakest link in our economy. And so we have to tackle that link by ensuring that, one, what we are producing is appropriate for the market export that you want it to go via the processing capacity in the middle. So that means that the likes of Anchor Borrowers Program, just written a paper to them, the likes of the Anchor Borrowers Program should be looking for prime export anchors who will make sure that the quality all across the chain conform. So when the processors come in and process that food, they'll be using like good manufacturing practices and HACCP compliance to make sure that they progress that food to export to meet the quality standard and end foreign exchange.
Prof, just
and
one second.
Compete with what is being imported.
Just 1 second, Prof. One of the issues that Dr. Michael Ashibogu raised is that of production clusters, and that because SMEs have to produce on their own, literally as we say, become their own local government. They are unable. They have to spend a lot more money in producing as opposed to the products themselves. So the product cost rises highly. And then it doesn't also help, perhaps, from what Dr. Michael Ashibogu has said, that government hasn't really been providing enough of those supports. So with what you are saying now, I would want you to speak to the fact that maybe we need those clusters, maybe we don't. What are those things that have been missing so far?
No,
it's not a problem of policies.
Without a doubt. We need the clusters. In fact, what has happened is that failure of policy is one. We have 34 export-free zones. How many of them are actually operating? We have 23 industrial clusters owned by Smidan. How many of it are actually operating? We have incubation centers in most states. How many of them are operating? So
but
governments are aware that
the question
is the way to go.
The question then is
we are
why?
now rationalizing.
Just a second, Prof. Why are those clusters not working? I asked that question against the backdrop of the fact that the Africa Development Bank is thinking of a special agro-allied processing zone in a number of states in Nigeria, to the best of my knowledge, 8 to start. And the Vice President has also said that SMEs are going to benefit immensely from that $500 million investment of the Africa Development Bank in SAPZs. So if the previous zones have not worked, what are the reasons for which they are not working, and how do we make sure that that doesn't happen again?
Let me explain something to you. The African Development Bank, the president of African Development Bank, was a minister of agriculture. And when he was a minister, he was heavily advocating crop processing zones and actually went out to set up some of them. So that story didn't start today. The thing is that there's something about the way Nigeria conducts their business. It's always top-heavy. In other words, what we call top-down. It all has to be initiated by government, and the government does the business the way government does the business. It works up, and it should be bottom-up. It should actually come to the likes of MSME and tell them, this is what we want to do. Let them drive. It has to be driven from the base. By the time they chop the money that is going to be used to build the center and the other center, they will leave it in a state where even when you bring them in, nothing can happen. But when you begin the planning bottom up, and it is open and is inclusive, and then you've got the people, and you have partnership between government and you build what is going to be sustainable. And then apart from, and also they like to operate in silos. They just go to the manufacturing sector and then work on forgetting that this manufacturing sector has to be fed by primary production of agricultural produce. If you are working from the bottom, all stakeholders that are important will be part of the beginning, the planning at the ab initio in the beginning. So that those who are going to produce the food are part of it, those who are going to process it are part of it, those who are going to export it are telling you what you need to produce and the quality standard that has to be applied in the processing for them to be able to handle this product and not have rejection. It's not rocket science. It's just the way they design how we operate. They operate in silos. Even departments, I'm the chair of the digital economy, bioeconomy, science, technology, and innovation in the National Development Plan. And I had to deal with these asymmetries and what you call the territorial behaviors. They're very, very territorial. They want to see, one department wants to, see the beginning, and because there is a peculiar interest involved, they don't want to work with other departments. They forget that there's no one thing that you can do that doesn't involve many others. It's the design. The design is faulty. It's not inclusive. There's a lot of what do I call it? I don't like to use that word corruption, but the thinking is wrong. The design is not inclusive.
So it's a long road to getting this inflation figures to come down. Is that correct? Let me quickly.
No, I don't think it's wrong. You see, like we said, this is not rocket science. This is something that we can do. It's just we deliberately don't want things to happen. You know, Prof just said this thing, working in silos, you know, everyone wants to be in competition. It's amusing to find government as competitors to itself. It's also amusing to find that you want to be a driver of a process where you have no competence. You know, if something should be private sector driven, you should focus on policy and leave those who are in the process of making money for the system, and you enjoy the benefits of taxes. But when a government decides that it is also a policy driver, it's also going to participate, it's also in competition with another agency in the same system, it will also be in competition with the private sector. What we're asking for is harmony of these policies. We have very laudable policies around this place. Like now, we're talking about this money that is going to come. It's to be an enabler for the African Continental Free Trade Agreement. But the question now is, by the time you finish building these clusters, they will become as moribund as the ones we have. Sometimes the locations of some of these centers makes it virtually impossible for businessmen to move their products to those places.
Well,
how do you place an incubation center in the middle of nowhere?
We hope that they will not become moribund. We hope
but that's our hope.
That a lot of the factors which had caused other centers to become moribund in the past would be looked at, and that lessons will be learned from those ones and incorporated here. I don't know, Prof, if you have any last words on this inflation. Are you optimistic that we could actually get this inflation figure down to single digits?
It will be a long time to come, but I don't know. We're in harvest season now.
Yes.
The tempo will continue to slow. You know, we are in harvest season until about October, November, so it will be slowing. But I don't think I will see it slow in this year or next year to single digits. It's quite away. It's quite away from now. But it will slow, and then it gets hot again towards December, when people start spending a lot of money for Christmas, and then we are getting into dry season, and then we have planting season, when we have to import a lot of, because we do import beans, we import cattle, food. We still import from our neighboring countries. And don't forget that one of the drivers, underlying drivers, is the devaluation of the currency. Because 1 naira used to buy 3 francs CFA 6 years ago, but can only buy 1.2 now. That doesn't tell us anything bad about Nigerian economy, but on the money, the foreign currency of the Francophone is not really the real value, because they are pegged to euro, and a lot of their forex a lot of their reserves is being bumped to keep that level. So, you know, so there is that pressure. The pressure won't go away because of the differential in the currency and because of their demand. And they also have, they are more landlocked than us. So they do need our food.
A lot of work ahead, certainly not very bright prospects, but certainly not insurmountable. We have to thank both of you for coming on Sunrise Early this morning. Professor Ken Ife is a macroeconomic policy analyst, and also Monday Michaels Ashibogo is the National Publicity Secretary of the National Association of Small and Medium Enterprises.
It's Nigerian Association of Small and Medium Enterprises.
Oh, Nigerian Association. Thank you so much for coming on Sunrise Early this morning.
Thank you.
Thank you.